In today's video, I am going to talk to you about the top 3 best ways to make passive income. Passive income is essentially income that you make that you don't work for. So this could be anything from YouTube income to real estate or REITs or even dividend income, because all 3 of which you don't technically work to get that payment. However, you probably would have had to work for the money that you would have had to spend to invest in that income. So let's get down to it. Let's check these out. So if you don't have the 150, 200, 800,000, whatever it may be in your area to invest into a house to be able to rent out, a great way to be able to do this is to be able to invest into a REIT on the stock market. So for example, Kilim Apartment Real Estate Investment Trust is a fantastic investment to be able to make in that real estate space. REITs are pretty good. So from there, the dividend income is 3.21% at the time of making this video. From there, the average income, the average volume, is 168,000 shares traded on average every single day. So unless you're buying 50, 60, 70,000 shares at once, you should be able to get in and out of this stock pretty easily. If you look at the max chart all the way back to just before 2004, you can see that, of course, there is some pretty good growth that happens with this company. Now, something I really do want to break down is, of course, there are times where you will see massive routes when it comes to REITs, and that's because it's real estate. Just like when you buy a house, the value fluctuates. It's not like recently where you can just basically sit on a house in Canada or at least in Ontario and just sit back and say, wow, my house is making me 20% a year and I'm doing nothing. Well, guess what? That's not usually how things work. Usually when we have a recession, you will see a 10, 15, 20, 50, 80% decrease in your house's value. Meanwhile, when it comes to REITs, you're going to see pretty close to the same number. However, you have to remember that real estate will be hit usually first in a recession, and then what happens is it will be the longest to recover. We didn't see that with this past recession because it was a virus and the government really propped everything up by just basically doing free money for everybody. Will this continue? We don't know, but if we get hit by a second recession very quickly, we may see another hit to the real estate market and a much bigger, massive hit, especially for what's happening over in China right now. We can also see that there wasn't exactly that great of a time between 2013 and 16. So you have to really time your purchase right. At the time of right now, hitting essentially an all-time high or getting close to it, I wouldn't be investing just as of yet. I'm going to wait until there's a little bit of a pullback. However, the nice thing with most REITs is the fact that, of course, you get monthly dividends. And something to look at as well is, are they increasing their dividend as well? Because you would much rather have a company increasing their dividend rather than decreasing or just not increasing at all. We can also see from their financials that they actually continued to grow their revenue with lesser earnings in 2020, even though many people were out of work and many people were having financial troubles, and that's still happening today. Another option is Choice Properties, Real Estate Investment Trust. Now this one gives you a much higher dividend at 5%, and the volume is much higher as well. We can see over the 5-year chart that, of course, it doesn't exactly go anywhere. It kind of trades within a range of between $12 and $15 a share. And when you go to the max chart, it tends to be very, very, very volatile. And for some people, that just may be too much volatility. And of course, when we look at these lows, the lows are higher each time, which is good, but when we see the highs getting pretty close to the same over and over again, to me, that's, unless you're just looking to get the 5% dividend, then this would be okay. But if you are looking for dividend growth or price appreciation, then that's not going to happen here. We also did see a dividend decrease while the coronavirus was going on. But overall, we can see that they do generally increase their dividend. We can see that 2019 wasn't exactly very good when it came to earnings. That could have been from purchasing properties. Their revenue did grow nice and steadily until 2020, but they still came away with positive earnings, which is good, and their revenue didn't dip below 2018's level either, so to me, that seems pretty solid. And when we look at Kilim Apartment REIT stock, we can see that the dividend payout ratio is only 29.5%. If this is at 100%, then that becomes a very risky stock. If it gets below or above 50%, that gets pretty risky as well. But sitting at 30% payout, that's a pretty solid stock. And when it comes to choice properties, it's at 31.5% as well. And at that point, it's not going to be a very risky stock when it comes to the dividend. They should be able to pay out the dividend for a long time. It's not like the Crombie REIT that's paying out 1,300% more than their earnings. So that would be ridiculously scary to me. Or even Artis that pays out 75%, I would be staying away from those myself. This is why I personally stayed away from REITs for a long time, because for a while I could only find high payout ratio REITs, but I'm starting to find more and more that are below 50%, and that's what I look for. You can also run with a couple of monthly dividend paying ETFs. Now this one is a bank ETF, ZEB. It pays monthly. It basically holds the top 6 Canadian banks. And when it comes to the Canadian banks, the big 6 banks have been paying dividends for well over 100 years without lowering their dividend or stopping a payment of a dividend. They have at times stopped increasing their dividend like they are right now because they're not allowed to increase their dividends because of the coronavirus and the government of Canada stopping them, or at least activist groups stopping them from increasing their dividend. So because of that, they still pay the dividend, but they're not increasing it as of yet. We're waiting until next year, I think, until they start increasing their dividend, but I think it's going to be a massive increase. But overall, financials are a very good way to invest. They give you, on average, the big 6 banks will give you about 5% dividends. Right now, they're sitting closer to around 4 on average. So to me, that is a very good way to invest. And if you're looking for passive income monthly, then a ZEB as an ETF is a great option because it pays monthly. Now, the annualized distribution right now is 3.3%. So you could easily just invest in the banks yourself and get a higher percentage, because what's going to happen is you're still paying a management expense ratio of 0.28. You are getting 10 cents a share every single month. And these are the holdings. So this is what I mean by you can actually just figure out a bank strategy that works for you. Personally, I am very heavy on CIBC and TD right now. My biggest bank holding right now is CIBC. My second biggest is TD. And then my third is basically a tie between Bank of Montreal and National Bank of Canada, and then next is Bank of Nova Scotia. I have never purchased Royal Bank of Canada. I will eventually. I don't know why I haven't. I just haven't. And as you can see, when it comes to the ZEB, it's gone from about $17.50 a share 5 years ago, or 11 years ago, sorry, to now being worth $36 a share. We can see the average right there between 2017 and 2020. The average of the banks did not increase in value. They just traded within a range. And if you were investing in businesses like National Bank of Canada, you would have actually increased during that time. So that's why I personally have a National Bank. It was increasing over and over and over again. It was a fantastic investment choice on my part. So that's 2 ways that the average person could make passive income: buying houses and flipping them, or buying houses and just renting them out. You can invest in REITs instead if you don't have a big down payment for a house, or you can invest in ETFs or stocks that pay you a monthly or a quarterly dividend that's at a higher percentage. The last option is YouTube. YouTube takes a lot of sweat equity, I'll say. At the beginning, it takes a long time to build a YouTube channel. I have 4 monetized right now, but Here's some of the numbers from this channel. Sort of the baseline every day on this channel is around $4 if I don't post a video. If I post a video, you start getting up to the $8 and $12 range for the channel per day, and that's going to continue to grow. Now this is over a 90-day period, which is $500, so you could say this is about a $2,000 a year channel, but this is going to continue to increase. Every time I post a video, they get residual views over time, and because of that, you will then see a continued growth to your revenue. You will also see a continued growth on your views, and of course your subscriber base. My biggest channel being my Basketball Coach Allen channel, which is the shirt I'm wearing right now. That one has just under 60,000 subscribers, and on that channel I make a killing, not necessarily from ads. Ads is around $2,000 a month. What you're getting, or what I'm getting on that channel, I have PDFs that I sell on my website that I advertise on those videos, so I get residual income not just from the Google ads, but from the PDFs I sell when it comes to defense books or workouts. And then I also have Amazon affiliate links down below this video, as well as all of my other channels as well, and those I can make between 1 and 8% commissions on whatever people buy. And from there, you can actually grow your revenue substantially from not just YouTube ad revenue, but also all the stuff you do on the side. Now, when it comes to YouTube, it does take a long time to get monetized, but you can still post those PDFs as advertise your PDFs and things like that in your videos and make money while you're waiting for the ads to come along. I hope that this video has helped you. If it has, hit that like button and subscribe, and I'll see you guys again next time.